what is this session about? So I'll tell you what I'll be doing. So I have first taken up a consolidated question paper discussion. That is the first question in every attempt is a question for 8 marks, that is computation of net GST payable. So that questions from past exam I am going to discuss. Thereafter all study material questions I am going to discuss, because see, not every past exam question is equally important, but it is worthwhile to cover the study material. I say study material questions each and every chapter, because that study material, latest study material questions is nothing but compilation of past exam RTP, some good questions which are relevant. So that only they have taken. So therefore this session what I am going to do is that I will be covering the question number 1, that 8 marks question, fully from past exams, okay, and updated as per the amended provisions, and thereafter I say study material questions. Apart from that, if you need anything, you let me know, so that I will be able to incorporate that into my discussion. Okay, so without further delay, let's start with this. So you can see, so this first question, that is computation of net GST payable. You can see this question number 1 and related discussion, that is a question concept related discussion also, wherever required I will tell. If you have not understood, you ask me, I will be able to repeat. So Mr. Dheeraj, a registered supplier of service in Bengaluru, Karnataka, has provided the following information for the month of February 2018. Intrastate taxable supply of service 5,20,000. Intrastate taxable supply means CGST, SGST. Legal fee paid to a lawyer located within the state. So legal fee paid to a lawyer is covered under RCM. Services provided by individual advocate or firm of advocate, either it will be exempted or it will be covered under RCM. Okay, so that we need to see. It will be covered under RCM, but it is within the state, so CGST, SGST. Rent paid to state government for his office building. Services provided by government to business entity is also covered under RCM. So there is some list of services which are covered under RCM. That point we need to know. So that list of services which are covered under RCM, easily we can remember with a keyword. So Sir CG got salads. Sir CG got salads. So with this keyword you can remember. So what is that? Yes, yes for security lending services, and I for import of services, and R for renting of motor vehicles, then C for copyright services, G for GTA services. So I am talking about the list of services which are covered under RCM. So S for security lending, I for import of service, R for renting of motor vehicle, C for copyright services, G for GTA services. Then next G is government services to business entities, and O for overseeing committee services to RBI, and T for TDR, FSI and long-term lease of land, and salads, yes for sponsorship services where the recipient is body corporate or firm, and A is agent services, insurance agent, then recovery agent, direct selling agent, business facilitator to bank, agent of business correspondent to business correspondent. Then L refers to legal fees, that is fee collected by individual advocate or firm of advocate. A for arbitrator services to business entities, and D for director services to company or body corporate, and S for security agency services. Okay, so these are the various services which are covered under RCM, where liability to pay GST is on recipient. Okay, so screen is not clear. Everyone facing the same issue here? Yes, don't know what is the reason, but I have good internet connectivity, pa. Okay, little blur, fine. Okay, no issues. So these are the list of services which will be covered under RCM. Yes, this will be uploaded in my YouTube channel. You can watch that later also if you want. Okay, if you are preparing something else, you prepare, you can watch it later also, no issue. So Sir CG got salads So S for security lending, I for import of services, R for renting of motor vehicles, C for copyright services, G for GTA services, another G is government services, O for overseeing committee services to RBI, and T for transfer of TDR FSI long term lease, S for sponsorship services, A for agent services, and L for legal service, that is advocate, individual advocate or firm of advocate services, and another A is arbitrator services to business entities, and this is director services to company or body corporate, and S is security agency services. So this is the list of services which are covered under RCM where liability to pay GST is on the recipient. Now this legal fee paid to a lawyer, so advocate service covered under RCM, legal services, so it is covered under RCM, okay. And then rent paid to state government for the office building, so services provided by government to business entity, so that is also covered under RCM, okay. And we have exemptions with respect to this. So advocate services, there is exemption, that is services provided by individual advocate or firm of advocate to a business entity whose turnover during the previous year does not exceed threshold limit is exempted. So here we need to understand whether this THARUN'S turnover during the previous year does not exceed threshold limit. That information is not given. If that information is not given, you should not take the assumption. See, whenever certain exemptions depends upon conditions, if those conditions are not given in the question, you don't have to take that assumption that that condition is not given, so I will assume that condition is satisfied. No, never do that. So a provision is dependent upon a condition. So here the exemption is dependent upon a condition. What is that? If THARUN'S turnover during the previous year does not exceed threshold limit, then it will be exempted. But there is no information regarding the turnover during previous year, so we should not take that assumption, okay. And so therefore it will be taxable and it will come under RCM. What about the first transaction? First transaction, in the absence of information, it will be FCM, where liability to pay GST is on the supplier. Then state government, so services provided by government to business entity. So renting of immobile property services, we don't have under any exemptions, but only one exemption is there. If the rent does not exceed 5,000, it is exempted. So we have one exemption for renting services provided by government to business entity. If the rent does not exceed 5,000, it is exempted. We have one point. Any services provided by government to business entity, if the charges does not exceed 5,000, then it is exempted. So here that exemption is not applicable because the charges here is 30,000 rupees, so it is taxable. Moreover, so if the recipient is registered, it will be covered under RCM. Yes, THARUN'S is registered supplier of service. So as the recipient is registered, for state government, THARUN'S is recipient. As the recipient is registered, it will be coming under RCM. If the recipient is not registered, it will be coming under FCM, okay. Then next, number 4, receipt for services for conduct of examination in Laval University, Pune, recognized by law, being an interstate transaction. So any services by way of conduct of examination, admission to or conduct of examination will be exempted. So all 3 category institutions. So this is not service provided by educational institution, this is service provided to educational institution. Here he is received for services. So received for services means what? He is providing the services to the educational institution. What is that educational institution? Laval University, which is a category 2 educational institution. So admission to educational institution or conduct of examination of the educational institution is fully exempted. So this will be exempted. We don't have any taxability related to this, okay. Now based on this information, we need to compute the net GST liability of Mr. THARUN'S for the month of February 2018. Now first we need to take, so presentation is very important in exam. So we need to write the heading, computation of net GST payable by Mr. THARUN'S for the month of February 2018. That's a heading that we will give. And then we will take, so value, particulars, value, CGST, SGST, IGST. The first transaction, outward supply, if you see, interstate taxable supply of service, that's an outward supply, 5,20,000. On that 5,20,000, so it being an intrastate, given in the question itself intrastate, therefore CGST, SGST payable. Then second outward supply is services provided for conduct of examination, this 16,000 is exempted. So these two are their outward supplies. Then what is their inward supply? The inward supply is with respect to legal fee and that rent. Okay, so legal fee and rent, they need to pay GST under RCM, and that too it is given in the question that legal fee paid to a lawyer located within the state, so intrastate, rent paid to state government within the state, so these two are intrastate, so CGST, SGST. So that is the liability. But remember, whatever GST paid on inward supply can be taken as credit and adjusted against the outward GST payable, correct? So now this 1,800 and 2,700 can be taken as credit and adjusted against the GST payable on outward supply, that is FCM liability, not with RCM liability, because RCM liability we have to always pay by cash, no other go. So what is the RCM liability? 1,800 plus 2,700, this 4,500 always we need to pay by cash, but this 4,500 we can adjust with CGST and SGST liability. Okay, so therefore 46,800, 46,800, we can adjust 4,500, 4,500, then 42,300 and 42,300 is the FCM liability, whereas this 4,500 and 4,500 is the RCM liability. RCM liability always we need to pay, but whatever GST we paid under RCM on our inward supplies can be taken as credit and adjusted against the GST payable under FCM. So therefore, so what is the total liability? FCM and RCM, but this has to be shown separately. What is our FCM liability and what is our RCM liability? So 46,800 and 46,800 is the net GST liability. So this is how we are doing the presentation. After doing the presentation, now notes are very, very important that we need to write. For every point, we have total 4 points. For these 4 points, why it will be taxable, any exemption is applicable, RCM, so that related notes we need to write. So that is that Laval University services provided is exempted, that point, legal service covered under RCM, then state government to business entity, that is RCM, so like that, and whatever GST that we need to pay under RCM, we need to pay using the cash ledger, we have to pay by cash. So these notes we need to write. So only when we are writing these notes, the answer is complete and we can expect full marks for the question whatever you are attempting. Okay, then next. So see, this meeting is getting recorded by CCASA, so they will themselves will share. Even otherwise it will be available in my YouTube also, so you can access that anytime. Okay, but it will take some time. I will be editing and I will be uploading, so but it will be available, rest assured. So when you attend a class, first try to listen to the class rather than thinking about whether backup is available, will you upload it in YouTube, all these things. So please let me complete the class. Okay, so it will be available everywhere, it will be available. YouTube is full of classes only. When you attend a session, first focus on that, so think about the backup thereafter. Okay, please try to listen, and if you have any doubts related to the subject, you ask me, I will appreciate those doubts. Okay, then so Mr. Uttam Kumar, a registered supplier of service in Kolkata, the second question we are discussing, has provided following information for the month of October 2018. Intrastate taxable supply of service 40,000. Amount received, so it is intrastate taxable supply of service, which means CGST, SGST. Amount received from Kapola Private Limited for service provided to company. He is a director in Kapola Private Limited, being intrastate transaction. Okay, so now director services to company or body corporate. So again I am repeating, so that Sir CG got salads. So the list of services which are covered under RCM, you should be perfect in that. So once you get the clarity related to that, any question you will be able to answer, because the questions involving computation of net GST payable will be covering mainly 3 areas, that is exemptions. So all these questions will be based on exemptions. So this exemptions, list of exemptions that you must be knowing. Okay. So what is that list of exemptions that we have for GST services? And whenever you are referring to exemptions, so you need to write in exam the section reference along with the notification reference. The section reference is section 11, read with notification 12/2017. Read with notification number 12/2017. This is the reference you need to give. Then list of services which are covered under reverse charge mechanism, where liability to pay GST is on recipient. So whenever you are this list of service only, I told you, sir, CG got salads. So that list you need to remember. So this, whenever you are referring, you need to write section 9 subsection 3, read with notification number 13/2017, and then input tax credit chapter. So from these areas only, the first question is always coin. So therefore, if you are comfortable, if you are having command over these three, so definitely the first question will be like a easy cakewalk for you. 8 marks is in your pocket. Okay. So now say this. So question number 2, here first one will be FCM. That too it is given as intrastate. So CGST, SGST. Second, director services. In that salads D for director services to company or body corporate, it will be covered under RCM. So therefore, in this case, who will pay GST? That Capola Private Limited will pay GST. So no GST in the hands of Uttam Kumar. Okay. Why? Because he is a director in Capola Private Limited. When he provides services, he receives a fees or some other money. On that, liability to pay GST is on the company under RCM. Then paid legal fee to senior advocate for one legal matter within the state, being intrastate transaction. So this is inward supply. So the first aspect is that you need to identify what are outward supplies, what are inward supplies. In that outward supplies, what are covered under FCM, what are covered under RCM. Again inward supply, what are covered under FCM and RCM. Now first one is a outward supply covered under FCM. So GST payable by Uttam Kumar. So that should be registered in your mind. Second point, so this is outward supply again, but it will be covered under RCM. So liability is not on Uttam Kumar, it is on the Capola Private Limited. That is second. And third, paid legal fee to senior advocate. Paid legal fee means this is inward supply, not outward supply. So on this inward supply, so GST payable under RCM, because advocate services to business entity is covered under RCM. So therefore, senior advocate for one legal transaction, so that will be covered under RCM and GST payable by Uttam Kumar. Then amount received for service provided by him as a commentator to a local recognized sports body, being intrastate transaction. So we have an exemption. Services provided to recognized sports body as a player, referee, umpire, coach, team manager is exempted. So services provided to recognized sports body as what? Player, referee, umpire, coach, team manager is exempted. But here it is commentator. Commentator is not covered under the list of exemption. Therefore, it will be taxable. And who will pay GST in this case? GST payable by supplier only. We don't have it in RCM. So therefore, it will be coming under FCM, and this is their outward supply. Amount received means they are providing the services. Amount received for acting as a coach in recreational activities relating to sports from one local charitable entity registered under section 12AA of Income Tax Act, being intrastate transaction. So this is services by way of recreational, training in recreational activities relating to sports, and that sports academy should be registered as a trust. Then it is exempted. Actually this point is exempted. Why it is exempted? So we have one exemption. Services provided by way of training or coaching in recreational activities relating to arts and culture, exempted, and that arts and culture need not be registered as a trust, it is always exempted. But whenever it is a sports academies, those sports academies should be registered as a trust, then only the fee collected by them is exempted. Here this sports academy is registered as a charitable trust and he is earning money by acting as a coach in recreational activities, so that will be exempted. Okay. For a director, if he is an employee, then RCM does not apply. Yes. So then we will never use the word for service provided to the company. Then it will not be coming under service provided to company. He is working as an employee. So then the company has hired him. Then whatever money that he gets will be called as salary. So yes, director receiving money from the company, if it is salary, then it will be excluded from supply. Employee to employer in the course of employment is excluded from supply. Under that category it will be. How to know whether he is an employee or not? So the remuneration which is paid by the company to the director should be chargeable to TDS under section 192 of Income Tax Act. Then so much of the money received by the director will be coming under income from salaries. So therefore there won't be any GST, but that information is not given. So clearly it is given service provided to company, means he is not an employee. So therefore that will be chargeable to GST. It is not excluded from supply. It is covered under supply. It is taxable, where liability to pay GST is on the company under RCM. Okay. Then compute the net GST payable of Mr. Uttam Kumar for the month of October 2018. So now we will give a heading, computation of net GST payable by Uttam Kumar for the month of October 2018. First we will write the outward supplies. In that outward supplies, the first one, intrastate taxable supply value 6,40,000, CGST, SGST. Okay. So because here everything is intrastate supplies only, so CGST, SGST. Then second outward supply is this services provided as a director to Kapola, that is not covered under GST in his hands, but we need to write that, and CGST, SGST column it will be nil. And then commentator, being a commentator and legal fee paid to senior advocate, it is an inward supply, so that is later, but commentator is also outward supply 1,20,000, CGST, SGST. Then amount received for acting as a coach is exempted, that is also outward supply. Only one inward supply, that is amount paid to advocate, so 50,000. On that CGST, SGST paid 9%, 9%. So that is their RCM liability. This is their RCM liability. Now this RCM liability can be taken as credit and adjusted against FCM liability. Okay. So 72,900, 72,900, and always RCM liability we need to pay by cash, and this is their RCM liability which they need to pay by cash using the cash ledger, and the FCM liability we can adjust that 4,500 whatever GST paid under RCM. So 63,900 and 63,900 will be FCM liability. So this is how we need to write, and then we need to present the notes as to we discussed now taxable, exempted, FCM, RCM, that related discussion we need to write. Then next another question is question number 3. From the following information, compute net GST payable for the month of March 2018. So in this they have given, so output GST, CGST, SGST, IGST, and amount opening ITC as per credit ledger nil, 1,000 and 37,000. Okay. So this is the information, we don't have anything else, it's a simple question. So what is their liability? CGST, SGST, IGST, 2,000, 15,000 and 24,000. What is the credit that they have? So SGST and IGST credit. We have 4 rules related to the manner of utilization of credit. So those 4 rules we need to remember. What is that first rule? So rule 1 says that, so there is no restriction with respect to IGST. No restriction with respect to IGST. No restriction with respect to IGST means, IGST credit can be utilized for payment of any GST liability, and any GST credit can be utilized for payment of IGST liability. And the second point in rule 1 is that, so with respect to CGST, SGST and UTGST, cross utilization is not possible. Means what? Respective credit can be utilized for payment of respective liability. So between CGST, SGST, UTGST, respective credit for payment of respective liability. Respective credit for payment of respective liability. Okay, means one to one only we can, cross utilization not possible. This is rule 1. And then another rule, rule 2 says that the priority, what we need to do, IGST credit should be first utilized for payment of IGST liability, and thereafter if balance any can be used for payment of CGST, SGST or UTGST in any manner, any proportion. There is no restriction. So first it should be used for payment of IGST and then for payment of CGST, SGST, UTGST, any manner, any proportion. Then what about CGST credit? CGST credit first should be utilized for payment of CGST liability, and balance if any can be used for payment of IGST payable. The same is applicable for SGST, UTGST also. So first for payment of its liability, then for payment of IGST liability. This is rule 2 that you need to remember. Then rule 3. Rule 3 says that, so before touching CGST, SGST credit, the credit of IGST should be completely exhausted. So ITC of IGST should be fully exhausted. Should be fully exhausted before utilizing CGST credit and SGST credit. CGST credit and SGST or UTGST credit. So before touching CGST or SGST credit, the credit of IGST should be fully exhausted. So that is the rule 3 which we need to remember. And then rule 4, the last rule. So rule 4 says that whenever we have all the credits and IGST payable, so IGST payable, first we need to use IGST credit. First we need to use IGST credit, and then we need to use CGST credit, and thereafter we can use SGST or UTGST credit. So this is the manner in which the credit should be used for payment of GST. So these are the 4 rules that we need to remember, okay, for the purpose of computation of net GST payable, manner of utilization. Now in that, so before touching SGST credit, the credit of IGST should be utilized. That is what rule 3 says. So I am taking 37,000 first, and then rule 2 says that IGST credit first should be utilized for payment of IGST liability. So yes, 37,000 we are using for payment of 24,000. So 37,000 minus 24,000. So what is the balance left? 13,000. So that 13,000, so I can distribute between CGST, SGST. Okay. So anywhere I can use. There is no hard and fast rule. So here what I have done, I have used 11,000 for payment of SGST and 2,000 for payment of CGST. And so here already 1,000. Now I am using SGST credit. So net GST payable 3,000. Is this the only answer? No, this is not the only answer. There are alternative answers also. But what we need to know is that the total of the net GST payable, should be equals to 3,000. So I can use entire 13,000 for payment of SGST. So then 15 minus 13, 2, then SGST credit 1,000 will be gone. So then SGST liability will be 1,000, CGST will be 2,000, 2 plus 1, 3,000. That answer is also correct. So anyway we can arrive at the answer, but what is the correct answer is that the total of the net GST payable should be equals to 3,000. then the answer will be correct. Okay, then that is with respect to this question number 3. Now look into question number 4. So these first 3 questions are asked in first 2 questions, if you see, that is old syllabus. Okay, May 18 and May 19, November 18, then this is May 19 old syllabus. So this is in new syllabus, they have asked one simple question, but here it is about manner of utilization. And now question number 4. So this is an RTP question. Tirupati Traders, a registered supplier of goods, pays CGST, SGST and IGST as the case may be under regular scheme. It has furnished the following particulars for a tax period. Value of intrastate supply of goods 12,000 and intrastate purchase of goods 10,000. CGST, SGST, IGST are 9%, 9% and 18% respectively. Both inward supply and outward supplies are exclusive of taxes wherever applicable. All the conditions necessary for availing ITC have been fulfilled. Compute the net GST payable. Here, what is the input tax credit? So CGST, SGST credit, if you see, purchases, so 10,000, 9%, 9%, 900 and 900. Whereas outward liability 12,000, so 12,000 into 9%, 9%, that is 1,080, 1,080. We can use CGST credit, SGST credit for payment of CGST, SGST liability. So the answer is simple, net GST payable. It's one simple question, nothing there. Then another question in RTP 19. So Mr. X, a supplier of goods, pays GST under regular scheme. The amount of ITC available and the output tax liability under different tax heads are as under. Compute the minimum GST payable in cash by X. So this is related to the manner of utilization of credit. So now we have CGST, SGST and IGST. What is the gross liability? The gross liability is CGST 800, SGST 2500 and IGST is 2000. First, which credit should be utilized? First we need to use IGST credit. So therefore, that 4,000 rupees we are utilizing first for payment of IGST liability, 2,000 we are utilizing. Still we have 2,000. So where we will use? Remember, don't use it for CGST. Why don't use it for CGST? Because already there is lot of CGST credit. If you use it for CGST, what will happen? There will be unnecessarily carry forward. So don't use for CGST. If you use for CGST, that CGST credit cannot be used for anything. So we just carry forward that. So use it for SGST. So where SGST credit is less, only 500, we can use that 2,000 rupees here. Then next we will use CGST and SGST credit. So CGST credit, so 2,000 rupees we have, we can use 800 and SGST 500 we can use, so that the net liability will become 0. The net liability will become 0. Net GST payable will become 0. Then what is the ITC carried forward? The ITC carried forward will be, so CGST 2000 only 800 we used. So 1600 we have excess credit and SGST fully we have used and IGST fully we have used. So this will be the answer. This is the way in which we need to arrive. So the net GST payable will be nil, and here in the answer they have not given excess ITC carried forward, but you can write that excess ITC carried forward CGST 1500 and that will be correct answer. Okay. Then question number 6. This question number 6 has appeared in multiple places. Okay. And May 18, RTP May 18, MTP November 19. Mr. X, a supplier of goods, pays GST under regular scheme. He has made the following outward taxable supplies in a tax period. So this is outward supply data. From outward supply data, what we get is the gross liability. So net input, like net GST payable is gross GST payable minus input tax credit is net GST payable. Gross GST payable is what? So GST payable on outward supply. Input tax credit is GST paid on inward supply. So that difference is the net GST payable. So outward supply is gross liability. Intrastate supply of goods 8 lakhs. So intrastate, and what is the rate of GST that is given here? 9 and 18. So therefore, 8 lakhs into 9% CGST SGST. Okay, so that will be liability. CGST SGST liability 72,000. Then interstate supply IGST 3 lakhs. So 3 lakhs into 18%. So 3 lakhs into 18%, that will be IGST liability 54,000. Okay, this is their gross liability. Now he has also furnished the following information in respect of purchases. So that data is for arriving at input tax credit. Intrastate purchase of goods 2 lakhs. So 2 lakhs into 9%. 2 lakhs into 9% will be 18,000. So 18,000 CGST SGST. IGST 50,000 into 18%, that is also 9,000. Okay, so 9,000, 18,000, 18,000 and 9,000. Plus there is opening balance also. Mr. X has got the following ITC with him at the beginning of the tax period. So this is their opening balance. So 57,000 and 70,000. So there is some opening balance of credit. So now total ITC, if you see, 75,000, 18,000 and 79,000. Now what is the liability? So gross GST payable will be 72, 72 and 54 gross GST. Now which credit we need to use first? IGST credit we need to use first, 79,000. So 79,000 first we will use for payment of 54,000. So still we have 25,000, but that 25,000 don't use for CGST because we have too much of CGST credit. Use it for SGST where we have lesser credit of SGST. So use the 25,000 for payment of SGST. Then you use CGST credit 72,000, SGST credit 18,000. So now you get the minimum net GST payable 29,000. And what is the excess CGST credit carried forward? ITC carried forward. Excess ITC carried forward is 3,000. Because we had 75,000, we use 72,000, so 3,000. Here full 18,000 and here 79,000 we use. So there is nothing to be carried forward. So minimum net GST payable is something which you need to be careful about. So we can use for a CGST also, no issue. But if you are using for CGST, what will happen is that, so there will be excess credit of CGST that cannot be adjusted with SGST liability because cross utilization between CGST and SGST is not possible for that reason. Then, yet another question, question number 7. Mr. Ekant, a supplier registered in Delhi, is engaged in the business of sale and purchase of plastic raincoats. He furnishes the following information pertaining to inward and outward supply made by him for the month of July. Value of interstate outward supply to registered persons. Yes, that will be chargeable to GST and IGST it will be. So we will take 30 lakhs. And multiply with 18%. So 30 lakhs into 18%, 5 lakh 40,000. So that is the first one. Then next, value of intrastate outward supply to registered person. So CGST, SGST. So 50 lakhs into 9% and 9%. Okay, 50 lakhs into 9% and 9%, that will be taken. And then value of intrastate outward supply to unregistered person, let it be. See, whether we are making sale to registered person or unregistered person, we need to pay GST. Okay, and we will recover the GST. It's only that the other person can take the credit or not. If you are making sale to a registered person, he will be able to take credit. If you are making sale to an unregistered person, he will not be able to take credit. That's the only difference. But so GST is payable on 15 also. See GST, SGST. Now this 50 plus 15 we can take it together and on that GST can be computed. So 65 lakhs into 9%, 9%, 5 lakh 85 and 5 lakh 85. These are the two transactions so far. Now next, value of intrastate inward supply from registered person. So on this GST paid can be taken as credit. So we don't have to pay, but whatever GST paid can be taken as credit. So 10 into, so whether it is within the state, yes, intrastate, on the GST paid. Okay, so inward supply input tax credit, if you see, so 10 lakhs, CGST 9%, SGST 9%, so that is 90,000, 90,000. That is with respect to this. Value of interstate inward supply from registered person. So IGST credit 5 lakhs into 18%. 5 lakhs into 18%, 90,000. That is also over. Then next transaction, intrastate inward supply from unregistered person. When you are making purchases from an unregistered person, definitely he will not charge GST to you. So therefore, there is no GST paid. Consequently, there is no input tax credit. Okay. So on that 2 lakhs. Then next one. So up to this is over. Next, following additional information is also provided by Mr. Ekant. IGST credit on capital goods purchased in the month of July. So IGST credit, so 1.5 lakhs. So we will take it as credit under IGST column 1,50,000. Then CGST, SGST credit on other inward supplies, including credit of 5,000 on account of membership of a club. Membership of a club, health and fitness center is blocked credits as per 17 subsection 5. Membership of a club, health and fitness center is a block credit. But when we will take ITC, if it is incurred by employer to employee under a statutory obligation, then ITC available to that employer. But it is not given as statutory obligation. So membership of a club is a block credit, ITC not available on 5,000. So out of 0.5 lakhs, 0.5 lakhs means 50,000, 5,000 not available means remaining 45,000 credit available. So that remaining 45,000, so credit we can take, okay, on inward supply including credit of 5,000 on account of membership of a club. This is CGST and SGST each. So 45,000, 45,000, okay, that is the answer for this. Then next one is availed consultancy services from Mr. Sujit, lawyer located in Delhi. So this is GST paid under RCM. First we need to pay this. This has two adjustments. We need to pay this GST under RCM and we can also add it to ITC. So first we will pay GST under RCM, intrastate, CGST, SGST, RCM liability, and also it should be added to input tax credit. Okay. Then next, brought forward ITC, that is opening balance of ITC, CGST 2 lakhs, SGST 2 lakhs and IGST 5 lakhs. So that is opening balance of ITC. So 2 lakhs, 2 lakhs and 5 lakhs. So anything else in the question? Nothing. Compute the net GST payable. So all these adjustments we applied. So now this is our RCM liability. This is our RCM liability. Okay. These are RCM liability. We have to definitely pay by cash. Now FCM liability, if you see, so we have 5,85,000, 5,85,000 and 5,40,000. This is our FCM liability. This is RCM liability and this is our FCM liability. And credit, input tax credit, if you see, we have 3,44,000, 3,44,000 and 7,40,000. Okay. So now can we use this credit for payment of gross liability? Yes, we can use. So 7,40,000 we can utilize for payment of 5,40,000. Okay. First 7,40,000 utilize for payment of 5,40,000 and still how much credit extra we have? So we have an extra credit of 2 lakhs and that 2 lakhs we can use for payment of 5,85,000 and 5,85,000. So we can use equally also 1 lakh and 1 lakh. Okay. Because the credit of CGST, SGST is equal na. The credit of CGST, SGST is equal, so we can use. Again I am repeating. So what is the way in which we need to arrive at the answer? First we have CGST, SGST, IGST and FCM liability. FCM liability. What is that FCM liability? So FCM liability is 5,85,000, 5,85,000, 5,85,000 and 5,40,000. Okay, this is their FCM liability. Then for this FCM liability, input tax credit, IGST credit, IGST credit. What is that IGST credit? So 7,40,000. First we will utilize for payment of 5,40,000. Then 2 lakhs we have as CGST credit, SGST credit is same. So we will be utilizing for payment of 1 lakh and 1 lakh. Okay. Now IGST credit is over. And then we have CGST and SGST credit. CGST and SGST credit. How much? 3,44,000, 3,44,000. So we will be utilizing 3,44,000 and 3,44,000. Okay. Now we need to do what is the net FCM liability. Net FCM liability 5,85,000 minus 1 lakh minus 3,44,000. So that will be 1,41,000. Okay, and 1,41,000 here 0. This is net FCM liability. Net FCM liability. For this net FCM liability, we need to add RCM liability. What is that RCM liability? So that is 9,000 and 9,000. CGST, SGST, legal services. So first you need to take FCM liability gross FCM liability. To that gross FCM liability minus IGST credit. So then CGST, SGST credit, net FCM liability. To that add RCM liability. Now you will get total net liability. What is the total net liability? The total net liability will be 1,50,000, 1,50,000 and 0. This will be taken as the total net liability. Hope you got the clarity related to this. Okay. So this is the way in which we need to arrive at the answer. So and we need to write the notes. Okay. So the first note is related to that advocate service covered under RCM, then input tax credit related, and then we have exemptions also, then blocked credit. So those wherever we have discussed these points. Okay, so in our mind some analysis will be going through. So that notes we need to write. Because of not writing the notes only, many students are not getting marks in exams. Okay, so please be careful with respect to that. Then next question, question number 8. Mr. Himanshu, a registered supplier of chemicals, pays GST under regular scheme. He is not eligible for any threshold exemption. He has made the following outward taxable supplies for the month of September 2018. Intrastate supply of goods 25 lakhs, interstate supply of goods 5 lakhs. So this is their gross liability. He has also made the following inward supply. Intrastate purchase of goods from registered dealer 14 lakhs, intrastate purchase of goods from unregistered dealer. So whenever we make purchase from unregistered dealer, first of all we have not paid any GST. So therefore there is no GST at all in this case. No GST and no ITC. Interstate purchase of goods from registered dealer, yes, IGST paid. Now balance of ITC in the beginning of the September, so 2018. So right now we are doing it for the month of September. So beginning of the September, opening balance of credit 95,000, 60,000 and 50,000. Okay. Now additional information. He purchased a car, intrastate supply, used for business purpose at a price of 6,72,000, including GST 36,000 and SGST 36,000 on September 15, 2018. So during the month they purchased a car. He capitalized full value including GST in the books on the same date to claim depreciation. First of all, car is a blocked credit. Car is a blocked credit. And when we will get ITC, so motor vehicles divided into 3. So motor vehicles are divided into 3 here. Motor vehicles used for transportation of persons. So motor vehicles are divided into 3 for transportation of persons, vessels and aircrafts and other motor vehicles. Okay, transportation of persons, then vessels and aircraft and other motor vehicles. Other motor vehicles means lorries, trucks, etc. Other motor vehicles, ITC available, always ITC available for other motor vehicles. Then motor vehicles for transportation of persons divided into 2. Capacity does not exceed 13 and capacity exceeds 13. Okay, capacity does not exceed 13. Capacity so does not exceed 13 including driver. I am talking about all the seats together. and capacity exceeds 13. Capacity exceeds 13, ITC available. Capacity exceeds 13, ITC always available. Capacity does not exceed 13. So again this is divided into 2. So we have 3 exceptions. In those 3 exceptional cases ITC available. What are those 3 exceptional cases? Further supply. Further supply. Further supply means I am purchasing and selling cars. Capacity does not exceed 13 means what will come? Cars will come. So further supply means purchase and sale. Then business of transportation of passengers. Business of transportation of passengers. Business of transportation of passengers or driving school. Okay. In these 3 cases ITC available. In these 3 cases ITC available, and in other cases ITC not available. In other cases ITC not available. This is with respect to motor vehicles used for transportation of persons. Capacity does not exceed 13. Whereas in case of vessels and aircraft, in case of these vessels and aircrafts, again that is divided into 2. So 4 cases, 4 exceptional cases. Okay. Further supply, then business of transportation of passengers, business of transportation of passengers, and driving school. Okay. Then extra we have for transportation of goods. For transportation of goods. So extra this. In these 4 cases, here 3 points, here 4. Further supply, business of transportation of passenger, driving school, and for transportation of goods. In this case ITC available, and in other cases ITC not available. ITC not available. So this is the blocked credits related to motor vehicle. Okay. Now coming to this discussion, what they are telling is that, so it is a car. Car means capacity does not exceed 13 and it is not covered under the exceptions, which means it is a blocked ITC, and credit not available. Then out of interstate purchase from registered dealer, that is interstate purchase from registered dealer, 4 lakhs is there na. Out of that 4 lakhs, so goods worth rupees 1 lakh were received on October 3rd due to road traffic jam. So in section 16 we have one point, conditions for availment of ITC. You should be in possession of tax invoice and you should have actually received the goods or services. So even though they have the invoice in the month of September, but they cannot take credit in the month of September because the goods are actually received only in the month of October. So which means we can take ITC in October, so not for September. For September, how much credit can be taken? Only 3 lakhs can be taken as credit on 3 lakhs. Okay. So now first we will see what is their outward supplies. Outward supplies, intrastate supply of goods 25 lakhs. So 25 lakhs into 9% and 9%. So this. Then interstate supply, interstate outward supplies 5 lakhs, 5 lakhs into 18%, that is 90,000. So this is their outward liability. Then input tax credit, they don't have any inward supply under RCM in this question. Then input tax credit, what is the opening balance? 95, 60 and 50 that we are taking. Then purchases from registered dealer, intrastate purchase from registered dealer 14 lakhs. On that 14 lakhs, CGST, SGST 1 lakh 26, 1 lakh 26, clear. Then interstate purchase from registered person 4 lakhs should not be taken, only 3 lakhs. 3 lakhs into 18%, 54. Then unregistered, no ITC, car also no ITC. So now we got the total ITC. So now what we need to do? First, we have IGST credit utilized for payment of IGST liability. IGST credit 1,04,000. So 1,04,000 we will use for payment of IGST liability 90,000. Still we have 14,000 credit. Now credit of CGST, SGST if you see, So 2,25,000, 2,25,000, 2,21,000 and 1,86,000. So we use for payment of SGST because SGST credit is only less. So the excess of IGST we will use for payment of SGST liability. So 14,000 rupees we can use it for payment of SGST, or we can use it for payment of both CGST, SGST. Anyway we can do, but the optimum utilization we need to follow. Okay. So 4,000 we can use and 10,000 or entire 14,000, so that the net GST payable will be 29,000. Suppose if that 14,000 I used for payment of this itself, then what would have happened? So liability 2,25,000 minus 14,000 minus, so 1,86,000, so that will be 25,000 will be SGST and 4,000 will be CGST, like that it will be. So total will be 29,000 only, there won't be any difference in that. So and we need to write the notes related to this. Okay. So up to this understood here, you have got the clarity. Can we avail ITC from RCM payment? Yes. Whatever GST we paid under RCM, we can take it as ITC in the same month, not in the next month. Same month, whatever GST we paid under RCM can be taken as credit and adjusted against which liability? FCM liability, not against RCM liability. Then question number 9. Messrs. Shri Durga Corporation Private Limited is a supplier of goods and services at Kolkata. It has furnished the following information for the month of February. Intrastate sale of taxable goods including 1 lakh received as advance in January. The invoice for the entire sale value is issued on 15th February. So 4 lakhs is the value. Intrastate sale of taxable goods. So what if goods are not at all received? If the goods are not at all received, we cannot take the credit. Simple. We have an invoice, but goods are not at all received, we cannot take credit, because one of the conditions is that we should be receiving the goods. Okay. RCM also the same, wherever it is, FCM or RCM, the conditions for availment of ITC remains the same. Then, so say this, intrastate sale of taxable goods including 1 lakh received as advance in January. The invoice for the entire sale value is issued on 15th February. So this 1 lakh will be taxable in the month of January or February. Now, in case of goods on advances, we don't have to pay GST. So because for goods, the time of supply as per section 12 subsection 2 is due date of invoice or actual date of invoice, whichever is earlier. So in this case, so the date of invoice is only relevant, not the advance. So in case of service only we need to pay GST on advances. In case of goods, no need to pay GST on advances. So therefore this will be, this entire 4 lakhs will be chargeable to GST in the month of February itself. Right now we are in February, so this entire 4 lakhs will be taxable in the month of February. This is their outward supply, chargeable to CGST, SGST, because it is given as intrastate. So 4 lakhs into CGST, SGST, that is the first one. Then second, goods purchased from unregistered dealer on 20th February, interstate purchase are worth 30,000 and balance are intrastate. Whenever we make purchase from unregistered person, first of all, we have not paid any GST, so there is no ITC related to this. Okay. So why? Because we are purchasing from an unregistered person. Then next, services provided by way of outward supply. Labor contract for repairing a single residential unit otherwise than as a part of residential complex. So we have an exemption. So construction services provided for construction of a single residential unit, individual house, is exempted. Pure labor contract, it should be a pure labor contract. Pure labor contract means only services. There should not be any supply of goods plus supply of services. It should be a pure labor contract. That pure labor contract for construction of an individual house is exempted. But only construction of an individual house is exempted, but repairs of the individual house is not exempted. Only construction is exempted but not repairs. So this service will be taxable. It is not exempted. So just to confuse, they are giving this. Actually, this many students will think that it is exempted. No, only construction of a single residential unit is exempted. So 1 lakh will be chargeable to GST intrastate 9% and 9%. So 9,000 and 9,000. Okay. Then next one. Goods transport services received from a GTA. GTA is paying tax at 12% and it is an interstate transaction. First of all, GTA services, they are receiving GTA services. So then will it come under RCM? If the rate of GST given in the question is 5%, then only RCM. If the rate of GST is 12%, then it will be FCM. Okay. So here the rate is 12%, which means GTA is already paying GST under FCM and they in turn recover it from this Durga Corporation. So therefore Durga Corporation no need to pay GST under RCM, but they can take the input tax credit with respect to that. Okay. So what is that input tax credit? 2 lakhs into 12%, that is 6%. So that is 12,000 and 12,000, but they have given it as interstate, means directly 12%, 24,000 IGST credit. Compute the net GST payable of Sri Durga Corporation. We don't have any opening balance. The turnover of Sri Durga Corporation was 2.5 crores in the previous financial year, means that point they have given to know that the turnover during the previous year exceed threshold limit. So now gross liability, if you see, 36,000 CGS, 36 plus 9,000, 45,000 CGST, 45,000 SGST, and we have 24,000 as IGST. That 24,000 we can use for anything, either CGST or SGST or equally for both. So then we get the net GST liability 21,000, 45,000, or if you use equally, then 45,000 minus, so 12,000, that is 33,000, 33,000 will be the net GST payable. So that is with respect to this. Then question number 10. So GST nil because we are not paying GST. This Durga Corporation is not paying GST. The supplier is paying. GTA is paying. We are not. The Durga Corporation is not paying. Okay. If Durga Corporation is paying, we would have taken that into their liability. It is a liability of GTA that will come only in input tax credit. Then in case of transfer of ITC to distinct person should also be in the same state. See, actually that is a condition given in the GST portal, but that condition is not given in the law. So therefore, logically in the law there is no information, but only in the portal it is given. Whenever we transfer the ITC, so the recipient should also be in the same state, is a restriction imposed by GST portal. Okay. So you write that way only in exam. Then law wise there is no restriction. Okay. Then question number 10. This is an RTP November 21 question. Namo Shankar Limited, a registered supplier in Mumbai, Maharashtra, has supplied goods to Narad Traders and Nandi Motors Limited, located in Ahmedabad, Gujarat and Pune, Maharashtra respectively. Supplier is located in Maharashtra. They have two sales, two buyers, Narad Traders and Nandi Motors. Narad Traders is in Gujarat. So Maharashtra to Gujarat interstate supply and Pune, Maharashtra intrastate supply. Namo Shankar Private Limited has furnished the following details for the current month. Particulars: Narad Traders and Nandi Motors. Price of the goods 10,000, 30,000. Packing charges. See, so this question is related to valuation. First we need to know the inclusions. So section 15 subsection 2 says about inclusions. So there are total 5 inclusions. Number 1, taxes, duties and cess by whatever name called other than GST should be included in the value. Number 2, any amount that the supplier is liable to pay but which is paid by the recipient should also be included in the value. Number 3, supplier incurs the expenditure and charges it to the recipient should also be included in the value. Number 4, interest or late fee or penalty for delay in receipt of consideration. Number 5, subsidy directly linked to the price other than CG or SG. These are the 5 inclusions. Now, packing charges will come under incidental expenses or other expenses incurred by supplier and charged it to recipient. So therefore, that will be included in the value. Okay. So packing charges will be included in the value. In the given price, it is not included in 10,000. So we are adding this. Then commission. Commission is also, see, any expenditure incurred by the supplier and charged it to the recipient before delivery of goods or before supply of services should be included in the value. So commission, so this also should be included in the value. Then weighment charges before delivery of goods, so that should be included in value. Discount, so discount will be excluded from the value if the discount is given before or at the time of delivery of goods or supply of services. So then it will be always allowed as deduction and it is recorded in the invoice, which means it is allowed as deduction. So what will be taken as the value? 10,000 plus 500 plus 500, so that will be 11,000. 32,000 minus 1,000, 31,000. So this will be taken as the value in this case. Accordingly, first one will be so IGST liability and the second one will be CGST, SGST liability. So 2,790 and 2,790. This will be taken as the answer. Then question number 11. This is MTP May 22 question. Riddhi and Company, a supplier of goods, pays GST under regular scheme. It has made the following outward supplies in the tax period. Intrastate supply of goods 10 lakhs, interstate supply of goods 8 lakhs. Okay. It has also furnished the following information in respect of purchases made by it in the tax period: intrastate purchase of goods and interstate purchase of goods. So CGST, SGST. First outward supply we will see. Intrastate, so 10 lakhs. So 10 lakhs into CGST, SGST. Okay. So that is this. And then second one interstate 8 lakhs. So 8 lakhs into 80%, that is IGST. So this is their liability, gross liability. Now ITC, opening balance 57, 60, 1 lakh 40, opening balance. And then intrastate purchase of goods 3 lakhs. So 3 lakhs into CGST, SGST. Then next one, interstate purchases 2 lakh 50, 2 lakh 50 into IGST. So this is their credit. So this is their liability. What is the liability? So 90,000, 90,000 and 1 lakh 44. First we use 1 lakh 85,000, 1 lakh 85,000 for payment of IGST, 1 lakh 44,000. So then we get 41,000. So 41,000. And that 41,000 we can use for payment of CGST and SGST. Okay. So here, so as the credit related to this is more or less the same, anyway we can use. So we can use 1,44,000 we have used. So balance we have CGST credit, if you see, 84 and SGST is 87. So how much we can use? So 41,000 we have. So 41,000, 38 and 3, but even equally also we can use, because the problem here is that, so we have total more credit 84,000 and 87,000. So 90 minus 84, 6,000, 90 minus 87, 3,000. So 6 and 3, 9,000, but we have 41,000. So definitely there will be carried forward. Okay. So we can use that credit and there will be carried forward 32,000. Even alternative answers are there. That's what I am trying to say. So this 32,000 need not be the only answer. So another answer also we can use equally 41,000, 41,000 we can use. So 41,000 divided by 2, that is 20,500 and 20,500 can be done. So if you do that way, then what will happen? So we have 84,000 and 87,000. So see the net liability. So 90,000 minus 20,500 minus 84,000. So 14,500 will be carried forward. And here also it will be 90,000 minus 20,500 minus 87,000. That is 17,500 will be carried forward. So 17,500 plus 14,500, if you see 32,000, that is what. So how the valuer will give the marks? So he will see the totals. If the totals is correct, yes, the answer is correct. If the totals are wrong, then only you will be losing the marks. So alternative answers exist, but be careful with respect to the total, that should not change. Then question number 12. So in case of discount after sale, credit note is not required. It is required, but it is only after sale. Suppose if the discount is agreed before at the time of supply, but the discount is given after supply, it is allowed as a reduction. For that, the supplier should be giving a credit note. But this discount is a pre-supply discount. Where is it given? So clearly it is given that the discount here, the previous case, duly recorded in the invoice. Duly recorded in the invoice means what? Pre-supply discount. So that's why it is always allowed as deduction. Okay. Is there any way to find the minimum cash outflow in the exam? Yes, there is a way. What you should do is that total liability minus total ITC, you see. Total ITC minus the total liability minus total ITC. We took one question. So this question is there. Okay. So total GST liability 90,000. 90,000 minus 24,000. So that should be the minimum net GST payable. Like that, wherever it is. So if you are confused about this, so which credit I need to use first? I don't know, sir, all these things. Total liability minus total input tax credit, that should be the answer. So ensure that you are getting that. So if you are getting that, then it will be correct. Then question number 12. So could you please tell 15E subsidy? That is when I am doing questions on valuation under GST, there I will throw light on to subsidies. Okay. So don't worry about that. Apportionment of ITC for exempt and taxable supply is applicable? No, not applicable. So rule 42 and rule 43 are not applicable for your exams. So that has been omitted for CA intermediate syllabus. So but normal apportionment is there, that is when I am using partly for taxable and partly for exempted, based on the turnover ratio I will apportion, that is there. But the manner of apportionment, reversal, all these things we don't have. Okay. So see this question number 12. Alpha Institute of Management, a private college, is registered under GST in the state of Punjab. AIM provides the following particulars for the month of April 2021. Tuition fee received from students pursuing management courses recognized by Punjab University, established by an act of state legislature, is 18 lakhs. So tuition fee received from students, so pursuing management courses recognized by Punjab University. Punjab University is an educational institution. What is an educational institution? 3 points. Number 1, educational institution means a school providing education up to 12th standard. Any board, that will be educational institution. Or education as a part of curriculum for obtaining a qualification recognized by law, that is also educational institution. And number 3, approved occasional education, that is also an educational institution. These 3 are considered as educational institution. In that, this comes under second point, education as a part of curriculum for obtaining a qualification recognized by law. Now, any service provided by educational institution to its students, faculty and staff is exempted. So due to that reason, the first point is exempted. Any service provided by an educational institution to its students, faculty and staff is exempted. Then second, tuition fee received from students pursuing undergraduation courses recognized by Stan University London under dual degree programs. So that is not exempted. That will be taxable because so qualification not recognized by Indian law. So due to that reason, it will be taxable. Then fee received from students of competitive exam training academy run by Department of AIM. So competitive exam training academies will not come under educational institution. It will be coaching centers. So coaching centers are chargeable to GST, taxable. Mess fees received from students pursuing qualification recognized by Indian law. So that is exempted. Why? because any service provided by educational institution to its students, faculty, staff is exempted, including supply of food, transportation facility or any other service. Okay. Then number 5, amount paid to local municipal corporation for premises taken on rent. See, so far what they have given is outward supplies. Now this 5th point is inward supply. They are receiving services from local municipal corporation for taking a premise on rent for conducting coaching classes for competitive exams. This will be taxable. This will be taxable. That too it will be taxable under RCM in the hands of Alpha Institute. Why? Services provided by government to business entity. This is services provided by government, local municipal corporation. Government includes central government, state government, local authority. To a business entity, it will be covered under RCM, where Alpha Institute is required to pay GST under RCM. Then legal services availed from Top Care and Company, a partnership firm of advocates for the competitive exam training academy. Same way, this is also taxable under RCM in the hands of this institution, because advocate services and arbitrator services are covered under RCM. So they need to pay GST under RCM. But advocate service and arbitrator service is exempted provided that business entity turnover during the previous year does not exceed threshold limit. So what is the threshold limit? 20 lakhs. They are into services. So 20 lakhs. Okay. The aggregate turnover of AIM in the preceding financial year exceeds 20 lakhs. So that's why these legal services will be taxable. Then rate of GST 9%, 9%, 18%, and we need to compute the minimum GST liability. First, gross liability, if you see, so what are all taxable? 8,50,000 will be taxable, then 5,40,000 will be taxable. Okay, these two are taxable outward supply. So value of taxable supply 13,90,000. Okay, then GST payable under FCM, first FCM liability. So 13,90,000 CGST, SGST 1,25,000, 1,25,000. Okay, 13,90,000 into 9%, 1,25,100, 1,25,100. Now GST under RCM. What is it? GST under RCM 4,500, 4,500. Why? Rent. So 50,000. 50,000 into 18%, 9,000. So 9,000 CGST, SGST 4,500 and 4,500. Then legal services. Legal services will be 20,000. GST payable under RCM. So 20,000 into 9%, 9%. So that will be 1,800 and 1,800. So this 4,500 plus 1,800 is the RCM liability. We can take that as credit and adjust the FCM liability. So 1,25,100 minus 6,300. So 1,18,800 is the FCM liability. Okay, and RCM liability 6,300, 6,300. This is the total net GST payable. Okay, so can you explain this question once again? I cannot explain, because entirely I cannot explain. If you have any doubt, I can. So full question I don't know, because anyhow recorded will be available. You please watch in that. If you have any doubt in that, I will be able to explain. Please don't treat me like taking a regular batch. I am not taking a regular batch here. So problem is like in the given time I need to complete lot of questions. So try to understand. Okay. So then catering service to college students not exempted. Catering services to college students, yes, is not exempted, because number one, transportation, security and housekeeping and catering services only to category 1, that is up to 12th standard, that is only exempted. But catering service, security and housekeeping and transportation for college and vocational education will be taxable. However, admission to and conduct of examination, all three cases it is exempted. Then that is with respect to this. Next, so these are the questions that we have on consolidated, like integrated case study scenario questions. And now, related to this discussion, if you have doubts in anything, you can ask. Over to you. You can unmute and you can ask any particular point. So you will be, I will able to explain to you. Purchasing papers for conducting exam is exempted as sir. Papers procured is actually supply of goods. It is not supply of services. For education services, we need to remember a matrix. Okay. So I told you that we have three category education institution. Category 1 is up to 12th standard. Category 1 is up to 12th standard. And category 2 is education for obtaining a qualification recognized by Indian law. Qualification recognized by law. Qualification recognized by law. And category 3, if you see, that category 3 is vocational education. Vocational education. Okay. Now, what we need to remember is the matrix of exemption. Services provided to education institution, not service provided by. Service provided by education institution, all services are exempted. This is services provided to education institution. Services provided to educational institution. Services provided to educational institution. Okay, what service? So first, transportation service. Transportation service. This transportation service, so in case of category 1, it is exempted. Transportation service, category 1, it is exempted. Category 2 and category 3 will be taxable. Same way, catering services. Catering service also, service, only service. Category 1 exempted, other 2 cases taxable. Then, security and housekeeping service, that should be within the premises, that should not be outside the premises. If it is outside the premises, even in case of category 1, it will be taxable. Okay. Security and housekeeping services. Security and housekeeping services. Security and housekeeping within premises. Within premises. Okay. And outside premises. Outside premises. Within premises it is exempted. If it is outside premises, it is taxable. Whereas in all other cases, it will be always taxable. This is security and housekeeping services. And then next one is admission to or conduct of examination. Admission to or conduct of examination. Okay. Admission to or conduct of examination. All 3 cases it is exempted. Okay. But supply of question papers is not a service. So here I am talking about service in relation to conduct of examination. So supply of papers, paper procured for conducting exam will not come under exemption because that is goods. So that will be taxable. Only services is exempted. Okay. Then last, supply of online periodicals and journals. Supply of online periodicals and journals. So only in case of category 2 it is exempted, but other cases it will be taxable. So this is the matrix of exemption that you need to remember. Okay. Then next question. Now provisional ITC 5% is removed. Yes. So if in question they are asked before 1/1/2022 invoice is missing, can we use 5% provisional ITC? Yes. Suppose if the month that is given in the question is before 2022, January 2022, then we can add that 5%, but usually that will not be tested in exam, because exams always they will be focusing on the updated provisions. So they will not focus on the old provisions. So don't worry, so they will not test. So if they are giving question, that will be only pertaining to 2022, and therefore we don't have to add 5%. So only the matched credit we can take. Okay. What is matched credit? that credit which is reflected in 2B. What credit will be reflected in 2B? So the supplier has filed their GSTR1 by due date. Those details only will come in 2B, and that is only March credit, that can only be taken as ITC. Okay.